Hey guys, Mike here. So more earnings today, and what did I emphasize yesterday? Discretionary spending. We got to keep an eye on it because if it is decreasing, that is a picture to what we got to see coming as far as the economy slowing, okay? Discretionary spending obviously is what we have after we paid all our bills, and it's just stuff you spend on, travel, or maybe you want to get a pedicure or go out and buy your dog, some new toys or something like that. And so, go to restaurants, that kind of stuff. And so one of the stocks we're going to talk about today obviously shows that discretionary spending is slowing. Maybe we're hitting that wall. Maybe people are, maybe don't want their stuff. Maybe just saying, I'm saving it for vacation. I want to get out. Or maybe they're putting it back for savings for a rainy day. And they just say, prices are just too high right now. And of course, we're going to talk about a travel stock, which gives us a glimpse into what do they see? What's the demand here, right? Might be a good play in that. And then one of the stocks is going to be one of those ones that usually does well during times like this because you absolutely have to have it, okay? So if you're getting out of it, hit the like, subscribe button, share the video, all that good stuff. I appreciate it. And let's get right into this.
Uber's numbers now hitting the wires, pushing those numbers up a day. Deidre Bosa joins us now with more, I should say, from afternoon to this morning.
Very early in San Francisco. That's right. They moved their report up, their release up, and you can kind of see why the results are better than expected. It's a revenue beat, $6.85 billion. The street was looking for 6.1. It is a loss of $3.04, but that is largely due to that accounting loss from its stake in Didi. We know the story with Didi, the ride-sharing company in China, been really beaten down. So we're not going to compare that. The outlook, though, and this is key because this is what tanked Lyft shares. This is better than expected. Uber is guiding an adjusted EBITDA of 240 to 270 million. The street was looking for just under 250 million. Gross bookings, the company says it expects between 28.5 and 29.5. Consensus was a little less than the low end of that range. And guys, we also got comments from CEO Dara Khosrowshahi, his prepared remarks he's going to be saying on the analyst call in about an hour's time. He says that our driver base is at a post-pandemic high. Importantly, we expect this trend to continue without significant incremental incentive investment. So this is a very stark contrast to what we heard from Lyft, which analysts, investors really sort of latched onto, and that is that they're going to have to continue spending, and that is going to hurt their EBITDA profitability, adjusted EBITDA profitability. And I heard you guys talking about this earlier. Uber really focused on driver supply earlier on last year. They went big with it, 250 million in the first half of last year. Lyft also did it, but they didn't quantify it exactly. And I think that's really the problem with Lyft shares that have been down as much as nearly 30%, is that investors really want to know how much they're going to spend. So clearly, very different stories this quarter between Uber and Lyft.
And so theirs was obviously better than Lyft, who's down almost 30%, but they dropped right when they reported earnings, started giving guidance. The stock started to trade up somewhat in the afternoon. But again, this is a stock that's not profitable, that doesn't perform well in this kind of an environment of high rates and all that good stuff. And so we're going to see how it plays out, see if it performs, because it's way off its all-time high as far as last year is concerned. So we'll see how this goes. And the next one's going to be the traveling industry.
Strong numbers, and as you said on the call, luxury remains a standout with JW Marriott, Ritz-Carlton, W among the highest in terms of hotel occupancy. It also costs a lot more, with average daily rate 27% above pre-pandemic levels. And I think one question that continues to come up, Tony, is this sustainable in an environment where inflation is becoming a bigger concern?
We think so, Seema. We see extraordinarily strong leisure demand. Leisure has led the travel recovery. In fact, in the quarter, we were up about 10% leisure demand relative to 2019. But I think what gives us continued optimism is the recovery we're seeing in the other two segments, in group certainly, but also in business transient, which has maybe been the slowest of the three segments to recover. When we look at our forward booking data, we think the summer is going to be gangbusters. I just was in Europe last week. The forward bookings, as more and more Western European borders are opening, look exceedingly strong, both in our fly to and our drive to leisure destinations. We see really strong demand at really strong pricing. So we feel great about the summer.
And you just talked about strong pricing. Obviously, we have this pent-up demand. So we know it's costing more to travel in general right now. When you do raise prices, how sticky are those increases?
We think quite sticky. we've been really encouraged by the speed with which pricing power has returned. In the last two big shocks to the travel and tourism sector, those being post 9/11 and the Great Recession, it took between 4 and 5 years for pricing power to really recover. And so it's really remarkable that 2 years after the start of the pandemic, we're talking about pricing that's meaningfully ahead of where we were in 2019. And I think that really illustrates the depth of that pent-up demand that we're seeing around the world.
And as you can see, this stock was all over the place today, popped up, popped down. Obviously, at the end of the day, with the market run up, it ran up nicely, up about 5%. But it's going to be interesting to see how travel stocks do or how the market treats them, because, you know, I think they obviously should go up. And I think they're going to have a lot of traveling going on this summer. And this is something I'm looking into. But, you know, let me know in the comments if you're in any travel stocks or trying to play the travel play, the reopening play, or whatever you want to call it. And so the next one, this is the one that talks to us about discretionary spending as well. So people are spending on the vacations, right? But are they spending on stuff like this?
All right, shifting gears now, and we're going to earnings being reported after the bell. We're looking at Etsy, as we can see, down in after-hours trading by more than 14%. Jared Blickery has the latest. Jared, what are we looking at here?
You're looking at a stock that is trading at near 2-year lows here. You can see on your screen now the the reporting quarter, the numbers were not that bad. Adjusted EPS coming in exactly as expected. You can see revenue coming in at $579.3 million. That's higher than the expected revenue. However, when you get out to the forecast, you see some disappointment here. They're seeing second quarter revenue of $540 to $590 million. Estimate was for quite a bit higher, $628.8 million. Also seeing second quarter adjusted EBITDA margins about 25%. The estimate was for higher, 26.5%. So a miss there. And then the key stat of gross merchandise sales, they're saying that should be $2.9 billion to $3.2 billion.
And obviously the forward guidance got them, but they just sell stuff people don't have to have, right? This is stuff you spoil yourself with, and you see it's down massive in after hours. And so, you know, we'll see how it's treated tomorrow, but that's one of those looks in. These are just things they sell that people don't want to spend their discretionary income on, because again, maybe they want to go on vacation, maybe they're saving it, we just got to wait to find out. And so the last one, this is one you know that usually performs well in bear markets or recessions or stuff, because you have to have it.
CVS Health just out with results. Want to get straight over to Bertha Coombs if we could, because I know she's got the numbers. Bertha.
We've got CVS results well ahead of estimates. On the bottom line, adjusted earnings coming in at $2.22 per share compared to an estimate of $2.15. On revenues of $76.8 billion, that's up over 11% year over year, and more than $1 billion over the estimate. And the place where they got it, by the way, they are raising their outlook, but among the highlights, Aetna Health Insurance revenues were up 12.8%. That's where the revenues were well ahead of expectations. Membership increasing 674,000 across all of their product lines. And medical costs were in line. We've been hearing this from the big insurers that we are seeing not as much of an impact from that Omicron wave. And we're starting to see a little bit of a return to normal when it comes to medical costs. In terms of their pharmacy services sales, up 8.5%, pretty much in line, driven by what they call better purchasing economics and specialty, with prescriptions up 5.8% on new clients.
And as you can see, you know, it's basically went up all day long. And so responded well to earnings, responded well to guidance. And the fact they own an insurance company too really helps them out, because guess what? You got to have health care, right? No matter how bad the economy is, everybody gets sick. You got to have those prescription drugs. And God knows we are a pill-popping society here in America. And so that's what's going to happen. The fact, you know, where their biggest numbers come from, the insurance company they own. Don't get me started, you know, with, you know, a company like CVS being able to own an insurance company on top of what they already do. I don't even get into that. But, you know, that's one you got to have, right? So what are we looking out for? Travel stocks, seeing how the travel and demand actually, does it keep up? Can people continue to afford it is what you really want to see, because summer's obviously the busiest month, right? And then you got companies like Etsy who will continue to report, are people spending their discretionary income on that, right? And it's going to take time for this to play out, but there will come a point in time if and even Jerome Powell said this today, that if, you know, the inflation stays high for a long period of time, the consumer is going to hit a wall, is what's going to happen, right? Because they're already going to raise rates, make things more expensive for us, right? They're going to start rolling off the balance sheet. So you're still going to see mortgage interest rates go up, loans, credit cards, you name it, okay? It's going to go up. They're not going to be putting any money out, no more stimulus, right? And so it's going to weigh on the economy. We're going to see how long the consumer, being us, can hold up to that before we finally say, I'm tapping out. Yep, I'm going to go ahead and start putting back money. Or basically somebody's living paycheck to paycheck now that wasn't living paycheck to paycheck, right? And so that's what we got to see. That's the important thing about these earnings. Tomorrow we got Block reporting. That's a fintech. Some other companies we got to pay close attention to. I obviously had a big run up today. I'll put my video at the end if you hadn't seen it about Jerome Powell and what turned this market around. And you really need to know what he said today. And I put as short a video as I can on that. And so make sure you watch that at the end here. And I'll see you guys tomorrow.